The delicate balance for the Reserve Bank is to get the timing of these interest rate rises just right, to crush inflation without killing off our economy. Angus Taylor is the Shadow Treasurer and right now is in Cowra as part of the Polypedal fundraising bike ride for the Soldier On Foundation for serving and ex-serving veterans and their families, along with other charities. Angus, thanks for your time today, taking some time out for us. Does this decision by the Reserve Bank today, less than expected, avert the risk of Australia's economy either slipping or falling into recession?
Well, I should say, Ross, despite the fact that it was less than expected, it was still an increase. And of course, Australians with a mortgage and businesses who have borrowed money, are paying a lot more than they were earlier in the year. For a typical mortgage of $750,000, more than $1,000 a month additional compared with back in May. So it's still a very significant continuing increase, much of which hasn't flowed through yet. Now, happily, despite all those challenges, it was less than expected. It remains to be seen what future increases will be over the coming months. But what I do know, Ross, is if government policy is right, then it is less likely that the Reserve Bank will have to raise interest rates. You don't want to be in a position where fiscal policy and monetary policy are fighting each other, where you've got the government with the foot on the accelerator and the Reserve Bank with the foot on the brake. That's what we don't want to see. This upcoming budget is extremely important to make sure we're getting that balance right. We are concerned about Labor's talk about blowing the budget and how the budget's not sustainable. Look, it's a very strong budget situation, but it's true that a government that does the wrong things will blow the budget.
OK, so is that the argument that you've just put to me, that the stage 3 tax cuts, which have been legislated, so both sides of the House have agreed to them, they came in under a coalition government, that they need to be amended because ultimately they are putting your foot on the accelerator by giving $20 to $21 billion a year into the economy at the same time that the Reserve Bank is trying to quell inflation? Is there right now the time for the discussion about whether they should be amended or scrapped altogether?
Absolutely not. So we've got to make a distinction here between the short-term inflationary and interest rate pressures and the medium-term to longer-term focus we need on pro-growth policies. In the short term, we do need a responsible budget. We need to avoid a price-wage spiral and industry-wide bargaining. We do have to make sure those supply pressures in the economy are being alleviated, getting more labour into the market, getting pensioners and veterans into the market. In places like Cowra, we've got the most expensive crop in Australian history in right now. It's a beautiful, beautiful crop. I've been riding through it for the last couple of days, but we've got to get it off, and that means having access to labour. So these things are really important in making sure in the short term we take pressure off inflation, we take pressure off interest rates. But in the medium to longer term, we need pro-growth policies, and that's why the timing is perfect. 2024 tax cuts across the middle income bracket, taking away a significant amount of the bracket creep, which is this insidious tax on Australians, increasing tax rates through inflation. That is the right time. This balance is right if the government has the right policies at the budget. What shouldn't happen is another broken election promise from Labor by having promised that they were going to respect the stage 3 tax cuts. They're now talking about taking them away. I mean, extraordinary. Just a few months after an election, they're already talking about breaking election promises. OK, so do you have fears for Australia right now, given the settings, globally in particular, that we are in for a tougher time, as the Treasurer has said today, that there is the prospect of a global recession that does affect Australia? Is there a likelihood of a recession here in Australia? Well, Ross, I'd say there's two parts to that. One is the Treasurer is inclined to want to talk the economy down and talk Australia's budget down, and he's been doing that day after day after day. We are in one of the best positions in the world. There's no question about that. I mean, we've come out of the pandemic with a budget that in fact has been balanced on a cumulative basis since November, since New South Wales and Victoria opened up. So that's an absolutely extraordinary position with a very, very strong economy. It's not to say there aren't any risks, but the greatest risk of all is the wrong policies and the wrong plan from Labor, and in fact just as bad is no plan. And right now we aren't seeing a plan that can give us the confidence that the Reserve Bank can continue to take pressure off and that we can get this balance right. Now there's no doubt there's storm clouds internationally, there's no question about that. But none of that should take away from the fact that we are in a strong position, and the key for the government now is to capitalise on that with a clear plan. We haven't seen that. There's another chance at the upcoming budget to get that right.
Angus Taylor, always good to have you in the program. Many thanks for taking a bit of time out of the poly pedal, and we appreciate your time today.